Hey, friends, grab yourself a soft drink, sit down, get your notepad and pen, and you are going to really learn a lot today. We're talking about how to maximize your farmland with Howard Halderman, me, and possibly another guest. He hasn't shown up just yet. We're talking about your highest and best use. So we're going to start this in 30 seconds.
Morning, everyone. Glad you're joining us today. And I am struggling a little bit behind the eight ball in the sense that my laptop was stolen in Chicago a couple weeks ago. Went up to the Big Ten basketball tournament, and somebody broke into our truck and stole everything that we had in it. Which I am breaking in a new laptop, which doesn't have all the connectivity that my old one did. So hopefully there won't be any issues for you today.
By the way, I'm on a new laptop also. A week and a half ago, I went to the Apple store. If you think that somehow Monsanto had some leverage over farmers and can extort money out of them, go to an Apple store. You walk in, and as soon as you get there, they basically just say, "Give me your credit card, also maybe your FICO score, and and also maybe even the account numbers for which your retirement funds are held," and they just start siphoning it from you. So. $4,200 on this computer plus Apple Care. Apple Care. I'm like, care what? What do you care? You don't care about me. They care to make sure that somehow you keep giving them their money. Apple Care was another like $150 a year. Then all of a sudden I said, my phone. Oh, yeah. They take your phone from your hand. And then basically, like, hang on a second, give us another few $1,000s and we'll give you another phone. Anyway, so I wasn't stolen from. Incidentally, Howard was in Chicago because of the Big Ten tournament. We should also note that is the Purdue Boilermakers Big Ten champion. They're now in the Sweet 16. Braden Smith, Fletcher lawyer. Braden written up in a nice half-page article in the Wall Street Journal. Two players in the entire college basketball world have started every game for 4 years for the same university, and they're both in the backcourt for Purdue. That's Fletcher lawyer and Braden Smith. Anyway, cool story. All right. So you're going to give us the news, Howard, on what's going on. Big quarter. I just got an email from the Halderman folks this morning. I think 5,825 acres have been sold, and I think that's just in the last month or two or three. Q1's always big. You've sold a bunch of stuff. I get your emails. You've got more properties coming online. You told us in our last meeting all these predictions of a slowdown or a downturn in agricultural real estate hasn't happened yet. Stock market's gone down, oil's going up. Then we got the conflict in Middle East. Usually, when there's uncertainty, hard assets become in demand. Money flights to something that it seeks as a safety haven, a safe haven, as we call it. And maybe real estate is that, and agricultural land. So, what do you got for us, the latest?
It's been a very interesting quarter. And I'll show a few slides here, Damien, to illustrate what my thoughts are. Because fundamentally, and we said from the very outset, fundamentally, it doesn't always make sense that farmland should be going up in light of the current ag economy regarding corn, soybeans, wheat, cotton, rice. Some of those crops are way worse off than others, but we are experiencing some interesting times. And so this was the Purdue survey. I think most folks have seen this. You're good. You see it? Okay. So this is from June, and you can see through all of half of 25, farmland was continuing to escalate well above back in 2013. If you were invested in farmland, which I know many of you are, if not all on the call, are invested in farmland, or you've got clients that are invested in farmland, it's been a good place. You've outperformed inflation just purely from an appreciation play. But if we take a look at then, and Damien, you always have me explain this.
Hey, wait, go back real quick. I do have you always explain WAPI. I want to make sure that the person that's viewing this, and remember, some people are watch the recording and they can't ask their questions. I want to remind you, if you are watching this, remember you can type in. We always make this interactive. Howard does a great job of covering any and all questions. So if you have a question, type them in to the chat, and we'll make sure your question gets answered. We got three lines here. I presume this means what Purdue usually does is they say high end farm ground, medium grade farm ground, low end farm ground. And that's not as scientific as some where it's based on, like you do, the WAPI, et cetera, but or productivity index or whatever. Is that what we got here on those three lines?
Exactly. So you got the price per acre on the left. The best land, the blue line, light blue line, I should say, is at 14,750 an acre last year. I would not sell my farm for that average number. Now, if you're in an area where the average is 10,000, then maybe. But I would not use these values as the indicator of where you ought to price your property. It's just more indicator of trend. The average land is there in the middle, and the below average is the green. And so you're exactly right, Damien, and you can see the span over history of where farmland values have gone.
And I guess what you just said is something that I suppose most people are thinking. I just saw on agriculture.com or Farm Journal or something like this where property in near Champaign, Illinois sold for $24,000 an acre. Those are usually outliers, but those numbers that you gave, while they are not necessarily, we know that there's the outliers, but the reality is 14,750 on the high even might be a little bit light. Certainly, if you were to go to Cass County, Indiana, or something like that, or that number is probably a little light, right?
And there are many sales that we do in the 15 to 20,000 an acre range in Indiana, in Ohio. Have we done sales over 20,000 an acre in the Eastern Corn Belt? Yes, we have. You tend to see these big high, headline numbers coming out of Iowa, coming out of I think there was a 40 acres in Iowa that brought 30 some thousand an acre earlier this winter, and you see some of those occur. It was 40 acres, two landowners adjoining it obviously competed for that and took that to a very high number. So those are outliers, but this is the general trend. And Purdue survey is good for that. It gives you a great idea where the market has been in the past and where we are today compared to that. Now, these are actual sales that we do. And as a reminder, the WAPI up there at the top is, we call it WAPI for short, but that is Weighted Average Productivity Index of Soils. So every farm we sell that is 90% cropland, we basically do this analysis and we come up with the average weighted productivity index of that specific sale. So you can look at soils in Indiana, they're rated anywhere from 100 all the way up to 188 bushels per acre. The best farms are going to be at the high end of that range. They will produce probably on average 225, 250 bushels of corn per acre per year. So it's not indicative of yield, but it does give us a comparison tool. Usually a farm that has a WAPI of 155 is going to be better than a farm that has a WAPI of 125 by a significant margin. Better soils, as long as it's well drained, it's probably going to be more productive. So that's WAPI. What we do then is we take the sale price of the farm, that's the blue line going up and down, actual sale price, so let's say $15,000 an acre, divide it by the WAPI, say that's 150 bushels per acre, and that equals a $100 per corn bushel of productivity index value. And you can see on this chart in 2025, the red trend line was in the middle 80s to high 80s, above 90 at the end of the year, dollars per corn bushel of productivity index. So how you might use that if you had your farm and it had 153 bushel WAPI, you would take that 153 times 90 point, I think 52 or something was our average for the year, and that might be indicative of the value of your property. Now, there's a lot of other factors that go into it, but it's one comparative tool that we use. And I show this because it shows 2025 trending higher. And throughout the year, we thought, oh, there could be some weakness. Farm incomes are down. There are some economic challenges, input prices. That was the theme all winter, Damien. Every seminar I did, and I did over 30, every seminar, it was more about input prices, fertilizer remaining high or going higher, seed staying steady, equipment higher, land rent really not moving. Land rent's been steady for 3 years. So it wasn't so much about rent and seed, but it was more about fertilizer and fuel prices being up, that were really, those costs are staying high for the farmer. And so as commodity prices have kind of come off their highs, they're back at break even or a little less than. So you look at this and say, gosh, why is farmland still going up in spite of farm incomes that are not all that rosy? It is a lot of other factors. And we've talked about inflation. Farmland is an inflation sensitive asset. It tends to do very well in inflationary environments, being a hard asset, and that is a major factor today. Interest rates, while not great, are very average, and they've actually come down 90 basis points, so that's been helpful. But really, one of the key factors is lack of supply. just not a lot of farms sell. And because supply's been low, that's been a very supportive factor of values. So that's where we ended last year. And you turn the calendar to 26, and it's a new year, new crop year. Sometimes that rejuvenates the market. Sometimes maybe there's a negative to that. And you look at this year, and gosh, in 26, we started at $120 per bushel of productivity index. Now, the trend line is down. And I will tell you, the last month of sales has been a lot weaker than the first couple of months of sales. And maybe that's indicative of the economy. Maybe something called the war creates a little chaos, creates a little uncertainty. Maybe the fact that we were promised E15 and we haven't gotten it yet. I think some of the realities of where we are in terms of commodity prices and interest rates are kind of settling in, saying, yeah, this year could be challenging again, although commodity prices have gotten better. But look at the average at the bottom of the slide, Damien. Average for 26, $98.90.
Mm-hmm.
We finished last year just over $90. That's an 8% increase.
Mm-hmm.
So you look at it and say, yeah, it feels like maybe we ought to be a little weaker, but we aren't yet.
Yeah.
Now,
So we showed a downward trend, and obviously that's the thing about graphs. It's like the average person now is going to say, "Oh my God, run for the run for the fire exits. This is going to be a problem." But this comparative to 2025, even though we've downtrended in the Q1 of 2026, we're still up from 2025 average.
correct. And so that's the one takeaway here is that in spite of what I look at here on this chart is a downtrend. And keep in mind that I don't know, there's 15 sales in this. So it's not every sale we do. It's only those that are 90% cropland or more that go into this study. So still, I feel very good about it. Now here's gives you the overall look at the graph. So this is the average for each year. 2026 is for one quarter. But this really gives you the idea. 25 is the all-time high. From a nominal land value standpoint, 2025 all-time high, better than 22, and 26 higher than that. And honestly, the economics in agriculture were way better in 2022 than what they are in 25 and
Yes.
26.
Yes.
So your flight to safety comment earlier, hard asset comment earlier, I think those are spot on with what we're seeing in terms of folks still wanting to invest in farmland, and then the limited supply. Now, one little nuance I've noticed: there are a couple of counties in Indiana. They're not far from me, and one might be the one I live in, where for whatever reason we've seen a little more volume than normal. Meaning that well over 1,000 acres has sold, maybe 2,000 acres has sold in the last 12 months. Not because of economic challenges, just because it was the right time in the life of those folks that own the farmland to sell.
Mm-hmm.
And when you get a little more volume like that in an individual county, we do see a little softness. I wouldn't call weakness much, but a little softness, meaning you're not going to achieve that premium high price for a great piece. It still sells well. The farms all sold in those counties that we've had, but where you might have expected 18,000 an acre, you're at 15 or 16, which 15 or 16 is historically a really good number, but you're not getting that premium price. And so we are seeing a little bit of that reflected in areas where supply has been up because that consumes cash. And as we just talked about, cash is in tight demand right now on the farm.
Yeah, now let's just for the fun of it, because eventually, by the way, if you're tuning into this live or if you are on the recording, we promise you we're going to talk about highest and best use. This all factors into it right now because in any given time, remember these markets move. Farm real estate hasn't moved in a rapid fashion, right? Or I mean, it did in 1981, where we lost 50% of our values basically in a 3 to 6 month time frame, but what you just talked about was cash. This is a different story just a couple of years ago. Everybody, the old joke I always make every one of our webinars, I'm going to put a name badge on that says I'm an investor from Chicago because that's allegedly who always buys these things. Just a couple of years ago, there were farmers that were absolutely flush with cash, and they might have been my age, they might have been older, they might have been. We had a bunch of that. the cash situation out here still is seeking something safe. You throw a little bit of Middle East, you get all this. Stock market went down here about, I think we're down 4% on the year. Last I looked, maybe back up yesterday. But um, the point is, there's less cash chasing this safe asset right now than there was just a while ago. It still seeks safety, but there's less cash on the sidelines, is I think what I heard. And I want you to compare that even to just 3 months to 12 months ago.
We generated a lot of cash in 21, 22, 23 on the farm. You might recall commodity prices, corn, $6. That's very profitable, well above $5, still very profitable on a per acre basis. And one of the things I will mention when we think about commodity prices, where they are today, corn exports are a record last year. In spite of the tariffs, corn exports were a record.
Yep.
Soybeans not. Soybeans are what we ship to China.
Mm-hmm.
And China shut us off for most of the year because of the tariff war. But corn exports actually performed very well. One thing I will mention is we have not had a weather problem globally, not just in the US, but globally for 4 years or more. And I think that last one was in South America. So we go through a time frame, 21, 22, 23, where we had higher commodity prices, and honestly, yields were average to above average. So farm incomes were good, and that generated a lot of cash. And some of that cash has been burned through the last 2+ years. Last year, I just did the analysis in 25, 62% of our buyers were farmers.
Yeah.
So the guys that are driving the tractor and tilling the soil and planting the crop. So it's still a majority farmer buyers in 2025. As we go forward, that cash has been consumed. And so then it becomes more, well, can I go to a lender and can I seek some additional capital to put into a farm to buy? Do I have some additional revenue that I've generated from 25 or 26? Those will be key questions going forward as we've really cut that liquidity down.
So then I want to dig into your next graph here, but what the folks that are landowners but have someone occupying, I'm sorry, renting it,
Renting it,
they want to know what the rents look like. So tell us about that. Rents typically, and we've covered this before, but if someone's tuning in for the first time, rents tend to be a lagging number compared to where values go. Is that correct?
They can be a little bit of a leading indicator when you get into a cycle where the market's moving higher from an income standpoint. And you could see some big jumps, specifically going back to '08, 9, 10, 11. Those rents moved up fairly quickly through that time period. You'll notice in this graph. Again, this is the Purdue survey, so that you get the top lines, best land, average, and then below average land. And you can see they moved up in that time frame. That was in response to higher prices due to ethanol and Chinese demand. And then they start to tail off in 2013, 14, they flatten out. They started to go down about the same time land values did. So they'll move ahead. Sometimes they'll move simultaneously. They tend to be sticky on the backside though. Maybe move a little slower going up, but then they also are slower going down. And that's what we're seeing right now. The last 3 years, 24, 25, and into 26, at Halderman on the 600 farms we manage, when I ask our staff, well, what'd you do with rents year over year? Steady has been the theme. Now, there could be those out there that saying, gosh, Howard, with farm incomes being challenged, rents ought to be going down. That's not the market. The market continues to be pretty strong, good demand, and people still wanting to rent more land. We had just a handful of farms that turned over from 25 to 26, and they were bid out. And those rents actually were steady with what we had the previous year or slightly, very slightly higher. So we continue to see really good demand for farmland. We use a lot of cash flex leases. So in this graph, this is just for a fixed cash rent. It says that if you have the best land in the state, it averages $325 an acre in rent. Again, don't rent your farm based upon these numbers. That's an average across the state. There are locations where you could get much higher than that. There will be other locations that won't be as high, but that's an average. One reason I like to show this chart, Damien, is contrast this chart to the land value chart.
Right.
Land value chart, I said earlier, outperformed inflation. And you can see that just in the meteoric rise that we saw in land values in the three land classifications over the last 4 or 5 years. Rents, not so much. Rents kind of look almost like what they were back in 2013. And from an inflation adjusted standpoint, if you go 13 years and your rents aren't significantly nominally better, landowners today, their dollar of rent doesn't go near as far as it did in 2013. And so if I'm an operator, a farmer, and I say, gosh, I got to get my costs down, maybe my landowner will work with me on rent, that's a challenging discussion because the landowner is going to sit there and say, well, gosh, my real estate taxes are up, my insurance is up, my costs are going up, and my rent doesn't really feel like it has. And in reality, from an inflation adjusted standpoint, it has not. So that's one of the reasons I like to show this is that rents are not what I would call significantly high. They are, from a nominal standpoint, maybe at the all-time high, but they're not from an inflation-adjusted standpoint.
Got it. So and by the way, this is the other part of it that these numbers might seem high to anybody, and the older you get, the more this seems like a high number. But remember, we're talking about a vast amount of inflation, and as Howard points out all the time, farm ground tends to be a one-to-one hedge against inflation. We, go to the grocery store. I paid $8.50 for a pound of burger, and that was a $4 pound of burger 6 years ago. So when you start talking about the inflationary pressures, and you mentioned insurance, Howard. uh, Property insurances, you're up 40, 60, 70% on some of these things. So this tends to, these numbers seem large, but maybe they really aren't. You could almost make the argument that while farm ground seems pricey given $4 corn, as a pure investment of something that's hard, again, compare it more to gold or another commodity, maybe it's actually not overvalued at all.
I think the cap rate is really where you see what has happened in terms of rent versus value. And the cap rate today that we see in the marketplace is somewhere around 2%. So just as pure investment, you say, well, do I want to invest in farmland at 2 or do I want to put my CD in there at 4? That's a choice. Now, CDs aren't going to appreciate. So farmland tends to appreciate 4 to 5% a year. We've talked about this before. If you listened in, that's kind of a 6 to 8% return. Um, Mark Alborn, or Mark White at Alborn, which is a consulting company in Rowayton, Connecticut. Mark White has studied farmland investments for large institutional clients like pension plans and the like for years. And his role at Alborn is they work with a state pension plan. They are not experts in any investment class. And they will go to Alborn and say, all right, if I want to put some money into agriculture, who would I work with? So Mark has been a guy that has studied a lot of agricultural investments over the years. He spoke at the AIM conference last month, which is the Agricultural Investment Marketplace. He spoke at that conference last month. He was the keynote leadoff speaker. And he really said to those investors in the room, don't miss row crop agriculture. Row crop agriculture is not something that's going to give you double digit returns. Okay, it did in 21 because we saw
Yeah, right.
inflation appreciation. But it doesn't give you double digit returns, but it is 6 to 8% every year for like 96. So you go back as long as Halderman's been in business since 1930. You put $1 in the stock market and $1 in farmland, and you're equal. And the stock market's arguably near the all-time high, and farmland's near the all-time high.
Mhm.
So those two assets perform very similarly, although they are not correlated. And it's just that's what farmland does. And so it was very interesting at that conference to hear Mark White and others say row crop agriculture is really kind of an attractive place to be because it's consistent. It's a real hard asset. And while not providing double digit returns, it doesn't often have negative returns. And that's one of the things you see in most of these charts is not much in the way of a downtrend. And if it is, it's for a year or two, and then we're back off to an increase.
Now, I could make the argument that we are maybe in a different world where it's not cyclical. Actually, I got to episode of my Business of Agriculture show coming out about this, that maybe it's not cyclical anymore. Maybe there are some fundamental changes in terms of the marketplace, the fact that we've got such tremendous capacity globally, et cetera, et cetera. And that's going to lead us into our topic for the main part of our show, Howard, about highest and best use. What is supportive of agriculture, maybe beyond bushels, is other use, land use considerations. We live in Indiana. You talked about it on my show. By the way, Howard was on the Business of Agriculture released just a few weeks ago. My show comes out every Monday. We're at 3,200 listens and 3,100 views just in the last couple of weeks because he's a star. In case you didn't know that, he's a star. He's the Braden
Oh,
Smith. He's
that
the
was your
Braden
show,
Smith of
though.
farm ground real estate.
Wasn't that your show, Damien? You might be the reason people listen in. I don't know.
So anyway, it's getting very good action. So go and check that out because we talked all about where are we on farmland and where are we on values, et cetera, and what's the marketplace look like. So with that in mind, you mentioned in my show that you and I live in Northeast Indiana. We own farm ground here in Northeast Indiana, and we have a couple of things going for us. We have precipitation. We're not dependent on the Ogallala Aquifer, which is another topic I've covered at great length. We are farming things in places like the Panhandle of Texas that we frankly should not be producing. We should not be producing there because why do we use water-intensive crops in places where there is no water? You and I live where there is water, and we also live where there's population. We have 7 million people in the state of Indiana. You've got your business that's over in Ohio, even more populous over there. And then where we see less demand from alternative uses is in places like, say, Kearney, Nebraska. So, what we're talking about in this thing, the main subject of today's show, is about are you attaining highest and best use? We're eventually going to talk about data centers and solar projects, et cetera, but those are not usually where farm ground goes. When farm ground goes away from just being row crop agriculture, it might go into CRP if it's crappy ground. It might go into pasture. Generally, where there's population, it goes into residential development. So there's a time, if you're an investor, you must look at your real estate portfolio and say, am I getting my highest and best use? So, Howard, you want to dig into that because you obviously do this. You catch a little flack from people that think that you're out here promoting alternative uses for farm ground. That's not true. You're looking at highest and best use, which is and anybody that's ever dealt in real estate. What are the two things? Highest and best use, location, 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 right?
Like, and so highest and best use gets back to private property rights. So I want to start out with that. I am a private property right proponent. I support private property rights, and I think as long as the use is legal and the use does not harm your neighbor, you ought to be able to do with your property what you wish to. And that's the freedoms granted, I think, by the United States Constitution. So that's one premise. But you're exactly right with the comment that being in the Eastern Corn Belt, Michigan, Ohio, and Indiana, where we are predominantly located, we do have higher density population. I point this out to people in my seminars. If you are in Nebraska on a fall Saturday and the Cornhuskers are playing at home in football, I know they're all the rage right now in basketball, but in football, Memorial Stadium in Lincoln, Nebraska is the third largest city in the state of Nebraska that day.
Hmm.
In Indiana or Michigan or Ohio, even as big as Michigan Stadium or Ohio Stadium are, those are not going to be in the top 10 of cities in those states. So we just have a more dense population. And then we have more economic opportunities. That big lake called Lake Michigan drives a lot of transportation of goods through the Chicagoland area. Well, that ends up going somehow through Michigan, Indiana, Ohio, a lot of manufacturing historically in these states. And between distribution centers and the distribution of other things like electricity, honestly, that's what drives data centers is the fact that we have a lot of electricity in the state. But we are in an area where we get opportunities like John Deere choosing to site a distribution facility for their equipment in Northwest Indiana. Well, that creates a sale for a landowner or two, and that those landowners may choose to do a 1031 exchange. Mm-hmm. They've sold land for 75,000, 100,000, and we can talk about data center land values, but data center land values can be anywhere from 80 to 120,000 an acre. Well, all of a sudden, you've got this 200 acres at this price that is overly inflated versus farmland. And a lot of those landowners that are selling say, well, I want to do a 1031 exchange. That's Internal Revenue Code, Section 1031 exchange, and I don't want to pay capital gains tax. And what I know is farmland. I sold farmland. I've been farming maybe, or I at least rent it out, and I want to reinvest in what I know, and that's farmland. And so those folks then take that chunk of change and will typically reinvest in farmland. That is supportive, maybe 10% of the price, maybe 5%, but it provides a subsidy of sorts. And subsidy is the wrong word, but it's really a support price that underlies our farmland values in the Eastern Corn Belt, more so than further west. As you go west, in Nebraska, in Iowa, those economies are more ag based. There's not a lot of 1031 exchange dollars around Des Moines, yes. Cedar Rapids, yes. But when you get further out from those, there's not a lot of 1031 money that's getting invested in farmland. It's purely based upon the farm economy. And we see it land values higher in Ohio for the same productivity of land in Indiana. Why? Because Ohio just has more volume of industrial and residential and commercial expansion. And those 1031 exchange opportunities exist more often.
So, the person that's tuning in here, by the way, remember if you have a question, type it in. We would love to have the interaction. We always do really well with that, and it spurs on a lot more interesting dialogue because you say, hey, maybe you're asking the question that somebody else wanted to ask, but they were embarrassed to. So don't be embarrassed about any of this. So when we're talking about this highest and best use, like I said, it's right up there with location, location, location when it comes to real estate. It's absolutely what you always look at, and this would be the same if you were anywhere. You just talked about the realities, though. If you're near population, your set of highest and best use alternatives are different than they are in any more sparsely populated
Location.
rural area.
Yes.
So, that in mind, we're going to get to the data center, et cetera, et cetera. There are people that squawk about this 1031 thing because they say, well, that just drives up values because now they go and they overpay for something versus paying the taxes. And there's some truth to that. Do you see that going away? Because I've had people squawking at me because I did a 1031 and bought some real estate, and they said, "Well, you wouldn't have bought that if it wasn't for the." I said, "Well, that's probably true, but I don't make the tax code. I just play the game that they put in front of us. I don't see that changing, and so that's to me that see if we
Oh,
don't see a change in that because there's a lot of money. It's an entire industry, right? First American Exchange, all these companies, and if that's the case, that means that while there is alternative uses for land, then that pays a bunch of money, then that money goes somewhere. I see there a lot. I don't see that changing. Do you?
don't we've been seeing tax deferred exchanges since the late 90s.
Yeah.
This is not a new thing. And it is, as you said, a developed industry. Unless Congress changes the rules, which they could, I don't see it going away. And I think you'll continue to see demand rolling out of large metropolitan areas like Detroit, Chicago, Indianapolis, et cetera, going forward. Uh, Here's the counter argument: it supports land values, which if I'm a farmer, okay, I'm irritated. I got a bid against that guy that is got the 1031 exchange money and he's maybe paying a little higher price because he's deferring taxes. Sure, that happens every once in a while, but not very often. And what it does do is it helps support land values in general, which shores up your balance sheet. The value of your assets gets supported more than what they might be if they were in another location. And so that helps you in terms of your total asset valuation, borrowing money, a lot of other things get factored into that. So, it's not going away and it is somewhat supportive. And yeah, you could say, well, those in a microcosm. So when you have the LEAP project down in Boone County happen, for a period of 12 to 18 months, there's a big demand driver from those 1031 exchanges and then they go away. There will continue to be 1031 exchanges coming out of the Indianapolis market. Keep in mind, most conversion of farmland is for residential purposes. It's not for wind, solar, data centers, industrial, it's for houses.
Yep.
That's what consumes most of the acres. And that's going to continue because population will continue to grow.
So let's talk about the person that comes to you. Maybe they're on this call, they're watching the replay, and they say, "Am I attaining highest and best use?" Because one of the things you do at Halderman is you help landowners make money off of their asset. That's why we have this thing: maximize your farmland. Let's go around the horn here. First off, You probably have had clients. When we head into lower commodity prices, I would tell some of these people that are farming ground I would say your ground really shouldn't be farmed. Highest and best use doesn't mean residential. It sometimes might mean not row crop agriculture. Give me some examples there. You've probably advised clients to put it into CRP or to sell it to somebody for a hunting property.
So if you've got land that floods 2 out of every 5 years because it's along a creek or a river and it is just subject to that kind of risk, then to evaluate, are there other options? Wetlands Reserve Program is an option for that kind of property.
Yep.
CRP, buffer strips. Are there other things you should look at that might monetarily make some sense versus continuing to try to farm them and seeing your rent decline through that whole time period? And honestly, they'll be better for the environment if you utilize those programs and do it the way the engineers recommend. So those are certainly highest and best uses. More common, though, Damien, is that landowner that owns land in a developing area, transitional area, for lack of a better term. This could happen in Tippecanoe County, Indiana, where Lafayette, West Lafayette, with all the momentum of Purdue and commercial development and honestly industrial development around that community, well, there's a little bit of expansion going on. And so I owned a farm that was 6, 7, 8 miles from the courthouse in Lafayette. But it's south of town. And now all of a sudden I hear the city of Lafayette's going to run sewer and water out in that neck of the woods. Mm-hmm. Well, does that change your highest and best use for your property? If all of a sudden city utilities are starting to come out your way, is there an opportunity there that's created to look at something different than row crop agriculture? And it might be. And that's where you might start getting people knocking on your door, a developer saying, hey, I want to look at a subdivision on this property, or I want to look at some kind of commercial development. And that is certainly something that happens in almost every community, even here in Wabash. We don't have population growth. We are steady on population, and that was a big win. We weren't declining anymore. But even with that, you have some industrial expansion from time to time, or you have some small parcels adjacent to town that all of a sudden could become appealing because of infrastructure that exists there.
The advice that you give when someone comes to you, maybe they do, and they say, and I hope they do. I've seen this with people that have a relationship with. They looked me up and said, I've been approached to sell my farm property. What do you think? I'm like, well, let's evaluate this. So kind of go through the thing. I'm a developer. A developer banged on my door. What do you tell these people? Obviously get an appraisal, but then the thing is your appraisers at your company base it on what a comp was. Well, the comp wasn't for that. So you start to have a lot of different issues. If you're trying to attain highest and best use, you're also looking at something that, what's the comparative?
You have to evaluate the offer on its merits, and what is the intended use of the property? Back to highest and best use. So if the use is for agriculture, okay, well, that's got to be fair market value with the other farmland transactions. That's easy for us to evaluate. We do 1,200 appraisals a year of that kind of thing. If the offer is for something different than agriculture, if it's for a solar development, if it's for a residential development, okay, what's the price? There are some multiples that are pretty standard, 2.5 times farmland for industrial use. So think about that. Farmland's worth 15. Well, for industrial use, two times is $30,000 an acre. That could be indicative of where, okay, but they're going to make an offer. It's going to be an option, most likely. When you talk about solar, wind, data centers, all of those are done under option. It's an option for them to buy under certain terms. That is not a purchase agreement. Vast difference there. Purchase agreement means you're going to do the deal, and most likely you're going to close in the next month,
60 days,
3 months,
yeah.
6 months. Option is, okay, if I check all these boxes of due diligence, then maybe I'll write a purchase agreement and do a deal with you. And so you've got to evaluate, is this the highest and best use for this property? So I didn't talk about earlier transmission lines and power. So one of the things that has developed over the last 5 years with renewables, wind or solar, and now data centers is where's your property in proximity to a transmission line? And if it's something for solar or wind, is it close to a proximity of a transmission line with capacity? Meaning it could take more electricity going on to it. If so, then solar and wind companies are probably going to be looking at you, especially if you're close to a substation, because that's where they could put power onto the grid. I'm not saying you want to do it or not. I'm just pointing out that could become a higher and better use from a value standpoint in terms of price. Not maybe value in terms of your vision as keeping it a farm, but in terms of price, it could be a higher and better use. Data center is a user of electricity. So they're looking at the transmission line for a different purpose. How do I get high volumes of electricity? And I'm going to have to run that through some kind of device that gets it to what I need it to be, but I need a lot of capacity there on the upside. And that then could be, and that's why you see some data centers going in locations where initially you kind of scratch your head and say, really? You want to put it there? Well, it's really all about the transmission line and the electrical capacity. So that's a new nuance in highest and best use that we as farmland managers and farmland appraisers kind of have to think about. All of a sudden, you see a transmission line going across the property, and that ought to raise an eyebrow, saying, "Oh, well, maybe there is a different use."
Yeah. So that, by the way, since your business is doing that, do you factor that in? Mom dies, and me and my three siblings need to sell this property, and you come out and say, "Yeah, we'll get this sold for you." And I'm looking, of course, at your list of sales, but then do I say, "Hey, by the way, there's a substation across the road from this property. I expect more because of that." Because again, we're talking about highest and best use. Are there things that, or maybe I'm going to buy that property? Do I put a premium on that, Howard? If I come in and I'm the investor, do I put a premium on it because of proximity in this new environment, because of power lines or power substations?
Maybe. I don't think any of our appraisers are today. Now, if you have that substation across the road and you've had the solar company, the wind company, the data center reach out to you, and maybe you have an option already in place for one of those uses, then you can start to extrapolate more value. But if it's an option, Damien, in today's environment, if I'm an appraiser, I'm not going to add much value to that until it's permitted and approved by the county. In Indiana, it's local control.
We were going to have we were going to have a big discussion about that very thing. So let's get into that about these things. So this creates a tremendous amount of emotion. And if you're listening to this, you might know my farm property is in the county just east of and this goes around and around and around. And oh my God, I'm going to deliver a speech tomorrow at Huntington University, and I am purposely not going to call for questions because they will hijack my presentation and it'll devolve into somebody's screaming session about solar panels. This creates a tremendous amount of emotion, but also, as much as you see on the Facebook, we're so proud of these people in Kentucky. They turned down $20 million for a data center on their farm. Like, I'm not sure that was a good decision. I mean, I'm not sure that was a good decision. Granted, it's a personal decision. Do whatever you want. In this economic environment where we are agriculturally and technologically, I see this train coming, and it's the politics of it, etc. So, what's your counsel? You've got people that come to you all the time and say, "You're the expert. What do I need to know? Or what should I do?" And it's county to county. I mean, there's a lot of complexities here. Where do you start?
I think it's important, first of all, that they do with their property what they want. I'm a private property rights advocate, and if they don't want to sell for a data center, don't.
Right.
That is not eminent domain, subject to eminent domain, and so as a result, if they don't wish to be a part of it, don't. So that's the first statement. The second is, could it economically be an opportunity for them? Sure. You get offered $100,000 an acre where your farmland is worth 15. That's an opportunity you might want to consider. And what could that do for your family? What could that enable your farming operation to do? You sell 200 acres at a premium price. Could you trade that into 1,000 acres? And could that put you in a financially much more solid position long term for your farming operation? Could you get a solar lease at $1,200 an acre per year in terms of solar lease payments for 200 acres, and you're farming 5,000? That all of a sudden is provide some income that secures your farming operation for the long term. Those are things that you individually need to evaluate. Are you interested in that or not? And not all people are going to be. But that's the way of the United States. You have that choice as a private property owner. So I think that's the first place to start. But evaluating those kind of opportunities, then the question becomes, well, what might I do? Howard, I'm interested in exploring it. What does this create for me? And then we start to explore, well, you could do a 1031 exchange. And the 1031 exchange, well, you could buy additional land. Some farm families have moved their operation to a totally new location. Other farm families have bought land just a little further out from where they currently are, and they expand their farm operation and they're doing 1 acre sale and buying 4 with it. And those are some really unique opportunities that we can assist a landowner through, and helping them not only evaluate the sale transaction, but then also help them buy farmland to replace it.
Howard, you put out some notes here and your thoughts about this. Since we're kind of on this thing about alternative use, again, we already discovered what farm ground is worth. Now let's talk about maximizing your farmland if there's an alternative use, which means are you getting highest and best use? So this data center thing is coming. Now, maybe it's been overbuilt. You and I are both old enough to remember the .com craze in the late 1990s. By golly, all of us. Howard and Damien have a crazy idea. .com was worth $1 billion, and you're like, why? Right. And so it fizzled. I don't think. I'm not. Oh, it's different this time. I don't think that the data center. I think alternative energy is a pure political thing. Like, in other words, this solar thing might come, it might go. Wind, it might come, might go. We know it's generally inefficient. I think data center and electrical generation, but are different than the green push. And it's going to gobble up land, and it's going to pour mountains of money into these areas if they accept it. Not saying I'm for or against. Is that your read also, that it's different than the whole solar thing? The data center and electrical generation is different than that?
I think it is. I think we have a dilemma today. So in the state of Indiana, our state senator, Andy Zay, was just appointed to the Indiana Utilities Commission. He is holding a series of meetings. The goal is to get electric cost down for you and me as residential homeowners, as business owners. Okay. I cheer for that, right? I pay electric bill to Duke Energy every month. I'd love for that to go down. Great. But we are also at the same time seeing coal-fired 24/7 generators, big power plants being shut down. Some of them are past their useful life. And you've got one at Wheatfield, Indiana. NIPSCO owns it. It's scheduled to be shut down. The Trump administration says you won't. Yeah. Because we need the power.
Right.
And so we need more power generated. We have electric cars. We have more demand than ever for electricity. Yeah. So you got more demand than ever. Rates are going up. Yeah. How do we meet that demand with more supply? So you've got to replace power plants. What do you replace them with? Is it wind? Is it solar? Is it nuclear? How are we
or even a new coal plant? Which, by the way, the environmentalists just ran and hid under their desk and ducked and covered, because I said, imagine in the year 2026 we're talking about maybe new construction of a coal power plant. Never thought you'd even think that, but it's as though we are tapped out. And so the point is, I guess, what's this do for real estate? Go ahead.
I just look at it and say it's a real dilemma if I'm a state legislator. First of all, the state of Indiana has taken a position: we want local county control. Okay. So counties decide what they do or don't do. And 70-ish, 90 of the 92 counties in Indiana have a moratorium against wind and solar. Okay. So that's their choice. That's the way the code and the law is written. But at the same time, we have this increasing demand. We have higher electric rates. We want to get them down. And the only way you do it, supply and demand, you have to have more supply. And we're shutting down coal-fired plants. Well, then the government says we got to keep them open because we need more supply. And then the environmentalists have recently come out. I just read in the Indianapolis Business Journal, 2 environmental groups are fighting the closure or the continuation, I should say, of the Wheatfield electric generation plant.
Mm.
And I'm like, well, what do we do here? And so down to data centers. Data centers are huge electrical consumers. But at the same time, your point about AI, artificial intelligence, and social media, a lot of these campaigns are run on social media. I don't want a data center campaign is on social media. Those run through data centers.
Yeah, right.
And so is that whole dynamic of artificial intelligence and data centers going to go away the way the dot coms did? No, I don't think that industry does. I think artificial intelligence does add a lot of value in proper uses,
Yeah.
and so as a result, I don't think it goes away. Could your statement about it being overbuilt be true? And you've got a lot of demand right now by folks trying to build data centers and build them quickly.
Mhm.
If it's a Google data center, okay, that's going to be specific to Google or Microsoft. But if I'm a speculator and I'm building a data center and then I hope to lease space to these tech companies, could that get overbuilt? I could see that. I think that'll be an interesting thing to watch because it's the hot topic of the day. Everybody's talking about data centers. The renewable energy is on the back burner today because the Trump
Yeah.
administration is not really in favor of it, and it was
Yeah.
heavily subsidized by the federal government. So I think that's a lesser factor today. Data centers are now the real one with the spotlight on them. Could that get overbuilt? Certainly, I could see that marketplace getting overbuilt. Um,
So, I want to go out here because the person that's tuning into this is like, hey, I'm all about my farmland. That's what it's called. Maximize your farmland. If I don't have rural property, if I don't have farm property along Interstate 69 or with the large electric transformation lines going across it, this doesn't matter to me. But I'm not sure that's the case. I have read articles in the Wall Street about a data center going to some pretty remote areas. So I think the bigger impact, and you tell me, you deal with this every day, is more probably how it affects you is if you are truly on a gravel road in a sparsely populated rural area, maybe it doesn't impact you, or there's no chance that your land or your neighbor's land will be sold for these alternative uses. But the person that did sell their land for alternative use that maybe is in a location that fits is the next buyer across from you. And I can see where it creates some hard emotions, but it's a reality. Am I seeing this correctly?
wind farms can go in rural areas without transmission lines because I really suspect that going forward, you might see the government, the state government, federal government saying, you know what, you can build that data center, whatever the name of the tech company is.
Yeah.
You can build it, but you got to generate your own power to power it. And so they're going to put in their own electrical generation. If they do that, they wouldn't have to be close to a transmission line.
More importantly, where this might be the big benefit, uh, the more hungry, the more rural, the more economically depressed now then are more willing to accept whatever, right? If I'm West Virginia and I say, yeah, stick all your data centers you want here, but you got to build your own power plant and use West Virginia coal. I is and now okay, and you say, well, Damien, there's nobody from West Virginia tuning into the Maximize Your Farmland series. Southern Indiana and Southern Illinois are another very. There's a lot of
Right.
similarities.
Do they build coal? I probably not. It's probably going to be nuclear is what they would build. But that becomes an opportunity for some of these rural communities, and certainly the data centers are offering some upfront economic grants. And last year in the state legislature, we had Senate Bill 1. Senate Bill 1 cut the funding to the county level from the state pretty significantly. So you've got a lot of counties, about every county in the state of Indiana is trying to figure out how to make their budget ends meet.
Yeah.
And all of a sudden, you have somebody come to the table that says, "Oh, by the way, if you let us get a data center sited in your county, we'll provide this economic development grant, and we'll provide. We're not asking for any tax abatements. We'll just put our $300 million facility on the tax rolls right off the start. In Wabash County, that would tie for the largest economic development in the county in history.
Yeah.
Gosh, that goes on the assessed valuation. That could be attractive.
Mhm.
I'm not saying a data center is coming to Wabash County. I want to be absolutely clear. I'm not aware of any. I'm just throwing that out as a hypothetical. So it does create with data centers or any other development like that, the opportunity for 1031 exchange money to come to that area. And that's an economic opportunity, and that'll be an economic support for farmland values in that geography.
So when we talk about the people that tune into this show, whether it's live or the recording, they're saying, "What can I do about this?" Most of these things that are alternative uses happen to be someone bangs on your door. Can you be proactive about this? If I say, you know what, I'm making not very much money off of this. It's only average farm ground. I want to pursue alternative uses, and they come to Halderman. Do you then you try and market it as development, or you say recreational property? That I've seen your listings, right? Okay, it's average farm ground. It's in, name the county, and I'm not gonna pick on any particular county. It's next to a river, or whatever. Build your hunting cabin and make this your play property. Take your kids there, whatever. Do you see Halderman eventually as a company saying a great place for a data center? This would work fabulously for renewable energy development.
I don't know that we'll do that because of the political just divide that there is over that right currently. Again, I'm a private property rights advocate. So if somebody data center comes to them and they want to clip that coupon and take advantage of that, by all means, they should have the right to do it. They obviously can't, harm their neighbors, and they would have to work through county permitting and all that to get it done. But here's the thing: if I'm a landowner and I would say I want to investigate alternative uses, what you can do, or we can do with you, is say, hey, I got 200 acres. I'm across the road from a substation. I've got transmission lines close to me. I don't know if there's anything that's appealing to anybody, but I'm going to go to the local county economic development corporation in Wabash County. It's called Grow Wabash County. I'm going to go to them and I'm going to make sure they know about my property and that I would be open to exploring some kind of development. And so you make those economic development agencies in each county, wherever your property is located, you can make them aware that here are the attributes of my property. I've got natural gas, I've got a three phase, I've got a substation across the road. I don't know if it qualifies for anything else, but I'm open to that discussion.
Mm-hmm.
You'd have a lot of folks that say, no, I'm not open to that discussion. I don't want to do anything but farm out here. And that's fine. That's their choice. But if their choice was to explore it, you can make the county aware. And then you are on their radar screen because most of those economic development groups get leads from the state. They get leads from their region partnership that sends
Yep.
them leads, and they get leads on their own. And those leads may be something that is an attractive employer. Gosh, it generates 125 jobs in that community, and they're going to build on 80 acres, their plant. And because you've made the city or the economic development group aware of it, they might choose to work with you. So that would be a strategy that I think a landowner might want to look at. And again, if you're down a dirt road with no power supply of significance around you, that probably isn't going to qualify your property for that kind of use. But if you're on major highways or you've got some power around you, substations, transmission lines, that could be something to explore.
So, do you get these calls where they say, because I imagine there's more cases where folks aren't attaining or achieving highest and best use, and it takes somebody like you to say, what you could be doing to make more money, and maybe they want to do it or maybe they do not. I mean, it seems to me that generally we were talking about data centers, and it's probably getting, creating a lot of emotion. There's folks that are just missing out on highest and best use by not having the right operator, by not having. I mean, that's where I look at it as I kind of like the stair steps. What's the first thing what's the first rung of the ladder that I can go to make more
Right.
money? And I think that's probably worth you walk me through that.
That is a fantastic point, Damien. If I look at a property, my first question is, what can I do to make that property better? And that's highest and best use. And you look at it and say, all right, is there another use for this? Is it residential? Is it industrial? Is there any other use? If there's not, okay, what can I do that might be that first rung of the ladder? And that could be tile drainage, that could be fertility, that could be irrigation, that could be grain storage. There could be a whole host of things that, from an agricultural standpoint,
Changing the operator from your cousin Larry, who really is kind of not very good at it, to the guy that's more assertive, more aggressive, more progressive, etc.
an operator change is another. And it might be an operator who brings alternative crops. Maybe they have a contract to raise seed corn. Maybe they have a contract to raise tomatoes. Maybe they have some higher value crop that they can bring to your property. And because you've made these investments in infrastructure like tile drainage or irrigation, your property qualifies for that.
Mhm.
And so that is the best way on the 600 farms that we manage. That's always what we're going to do
Yep.
is look at it and say, how can we maximize and make the highest and best use of this property and maximize your farmland? And most of the farms that we're managing don't have a higher and better use for residential development. Like 99% of them probably don't. But they all have an opportunity to be better properties. And what are those incremental improvements that we can make within the budget that the owner has? And with those improvements, are there operational changes? Maybe it's changing the tenant, maybe it's not. Maybe it's changing lease type. Maybe the tenant has been wondering, gosh, I would love to raise seed corn on this, but if you just put irrigation on it, then I could.
Yeah, right.
It's not changing the operator, it's just providing him a different model that he can work with to enhance the property.
And then also, I go to the recreational aspect of it. I'm sure that there's folks that either you wouldn't have to sell it. There's ground that's being farmed. It's maybe less than it used to be when we were kids. That really its best use would be sticking into a CRP program and leasing out hunting rights because it's like you said, it floods 2 out of every 5 years. It's erodible. It's highly erodible land. Whatever. There's that. So I think there's a lot of land that's not attaining its highest and best use. Am I accurate in my assessment?
I would say that there are. And there are a lot of farms today. One of the other factors that is increasingly an issue is field size and field shape. And we had a study that Pat Karst did last fall on two sales. The Whoppies were 5 bushel different. So 158 and 153. So you'd look at that and say, gosh, just on Whoppie, those aren't that much different type of property, right?
And that should amount to your thing a $500 difference in sale price, right?
And then you look at it and say, when one was 68 acres and one was 40 acres. So size, not that much different. Both of them had good road frontage. So, and one was in Fairmount, one was over in Benton counties. There's a location difference. There's a financial location difference, but they brought 100% difference in price, Damien. 100% difference. One sold for $62 a Whoppie bushel, and the other one sold for $112 a Whoppie bushel. What was the difference? The 68 acres, the larger piece, was in 6 fields.
Yeah.
And it was divided by ditches. They were not something that wasn't a fence row you could clear and
Yeah.
make better. We talked about making a higher and better use. You
Yep.
couldn't. And so those 6 fields it was a geometry study,
Mhm.
trapezoids and
Mhm.
triangles. And today's farming equipment is
Yeah.
large and getting larger. And that's for efficiency. And with the technology that exists today, if I have a large planter, large harvesting, and I go into small fields,
Mhm.
honestly, there's going to be some fields where you say that's just not worth it anymore.
Mhm.
And so you're going to give a very discounted rent. So back to your highest and best use. That kind of farm where you can't really change field size, maybe there are some other uses from a recreational standpoint, from a utilizing the various programs that the Natural Resource Conservation Service offers. Those are things that you might be able to capitalize on that generate a higher long-term value for your property than what production agriculture will, just by the nature of the way your farm lays out.
We talked about going through the ladder. The example like there is somebody, a professional advice would say, you're not ever going to get very good cash rent out of this, and you probably don't want to farm it yourself. So, what's an alternative use? Well, maybe recreation, development, et cetera, et cetera. So, what's the number one thing here? I guess we should probably wrap stuff up. Highest and best use. I think there's more alternatives than there ever been because I think this data center and some of this, and we're not pro or against, we're just talking about this as business people. There are more avenues for attaining highest and best use than certainly there used to be. First off, you start with getting the right operator, the right cropping system, improving the asset. Is there timber? Are you managing the timber actually with the professional consultation versus just it's a woodlot? But then after that, it becomes these other things. As long as you've got population, as long as you've got this big push for these other uses, it seems to me that we're going to see more of this evaluation of highest and best use, which is why we talked about it here. Am I right?
think there will continue to be more options than ever. And I'll end with a point that Don Lamb, who's the Indiana State Department of Agriculture director, Don and I were in school together way back in the late 80s, early 90s at Purdue. But Don spoke at one of our seminars back in January, and he challenged the group, and the group was mostly farm operators and landowners. But these farm operators, he challenged them. He said, Brazil and Argentina are probably going to continue to be the commodity producers of the future.
Yep.
So my challenge for you, the United States grower, how do you fit into this agricultural system going forward? And he wasn't meaning it in a negative way. But in the United States, we have better technology, we have better farmers, we have better access to our properties, better transportation lines than anywhere else in the world. So we have the opportunity, I think, in the future to have a more diverse set of crops than we've ever had before. More niche crops, more identity preserved crops that fit this specific use or that. Maybe it's for fuel, maybe it's for pharmaceutical, maybe it's for a food grade something. And I think those will be more and more opportunities that come up for various growers, especially as growers get larger and consolidation occurs. All of a sudden, contract production to an end user is going to be pretty appealing. And I think those are going to be options that come up for landowners that they ought to consider and take a look at. In addition to all the what I would call commercial development opportunities that will continue to come up. Now, keep in mind, most of Indiana, most of Ohio, a lot of the farms we manage are in very rural areas. So they're not going to have that opportunity to sell for a data center or residential expansion or commercial expansion. They might be influenced by people who do, but that isn't going to exist for them. But there are a whole host of things they could investigate on their farm to make it a higher and better use in agriculture. So that's where I'll leave it.
I'm going to throw a couple thoughts in there from my observations as a guy that covers a lot of ground in agriculture. There's going to be a bunch of farmland that's going to transition based on the baby boom generation and aging demographics. If you are coming into this and maybe you're inheriting part of it and you're saying, how can I make this? This is why this discussion matters. If this, you got to look at this asset and say, was it managed by grandma for its highest and best use? Could we do something? Is there 160 acres of it and 20 of it gets peeled off for something and we use those proceeds to then pay for the rest? So that's where I think these discussions are valuable because of the amount of transition that we're going to see and also the opportunities that you and I both admit are more than there. In the old days, it was sell it off for a house, sell it off for subdivision, golf course. Howard, I'm old enough to remember when crappy farm ground got turned into golf courses. And then 15 years ago, crappy golf courses like Frazanda, south of Huntington, got turned into farm ground. So I saw crappy farm ground become golf courses, then crappy golf courses become farm ground again. The cycle never ends.
Doesn't end, but yeah, currently I see more golf courses going out than being developed. So I would not hang my hat on that one.
Yeah. Well, it's too bad because I took up golf 6 years ago during the COVID thing. Hey, we do this every quarter. His name is Howard Halderman, and the company is called Halderman Companies or Halderman Real Estate and Farm Management. We're going to do this again in June. We haven't picked our topic. I gave three sources to Howard, and he hasn't decided which one he wants. But I said, I think we can talk about farm consolidation and what's it mean for you, or is your land being mined, or are you set up for a successful transition? Well, one of those three topics is what we're going to cover in June, and we'll give you the date and we'll give you the topic when we dial it in. If you didn't think he was famous for being on this webinar, remember he was also on the Business of Agriculture show just a few weeks ago. Thousands of listens, thousands of views already. And if that wasn't enough, he appeared on TV, unbeknownst to him. I didn't see it during the Purdue game. My friend EJ said, hey, Howard was on TV during the Purdue game. While his truck was being broken into, he was on TV, so maybe it was all worth it. Anyway, you get the last word.
Well, hey, thank you, everybody, for joining us today. Farmland has a plethora of opportunities, and all we want to do at Halderman is make sure that you're maximizing what those opportunities could be. And I'm not steering you one way or the other on any end use. That's your choice. You own the farm. All we want to do is make sure you know what the opportunities are and help you evaluate those if you wish to pursue them.
Got it.
So thank you all, and I hope you have a great rest of your week. And thank you, Damien, for leading the way.
You got it. Till next time, you know where to find us on the website. Thanks for being here. We'll see you in June. Till next time.
Thank you all.